Hello traders, Greg here with a market update. Okay, so overnight in the US, we had some very important economic data out. We had the monthly CPI data for June, and it is important because we do have a Fed rate meeting, an FOMC meeting on the 29th of June, so coming up in the next couple of weeks. So market certainly was looking at this data to price in expectations for that Fed meeting. So the data, headline number year on year, market was expecting CPI to come out lower. So the previous month was whopping 4.2%. Market was expecting that actually to come off quite a bit, down to 3.8%. But it came out all the way down to 3.5%. So we saw a huge downside miss on CPI, which obviously markets think is a big positive. On the core number, which strips out volatile, basically food and energy, especially obviously what's going on with crude prices, but that core number year on year, market was expecting that to go from 2.9% from previous month down towards just marginally lower at 2.8%. But yes, we had a downside miss there as well, much lower, came out at 2.6%. So yes, huge surprise on US CPI numbers overnight. So if you have a look at what happened with the bond market, how that reacted, US 2 yields at the time were trading up towards 4.3%. They sold off violently, a good 15 basis points lower. Before settling back up a little bit to 4.2%. 10 years, they were up almost up towards 4.7, very elevated levels. And yes, they also came off violently, a good 15 basis points straight after the number, and settled just below 4.6%, around about 4.58. So look, both of those, those yields did go in bid into the number. And they have been going up in the last couple of weeks, making new fresh highs for the year, etc. But look, where they settled is still elevated levels. Anyway, they are well off the highs for the time being. If we have a look at Fed pricing, now before the number came out, market was expecting that the FOMC meeting, that it was pretty much a coin flip on whether or not the Fed would actually raise rates in the next couple of weeks at that 29th of June, July meeting. But after post-inflation coming off as much as it did, those odds changed, and now market is pretty much convinced that the Fed's going to be on hold. So Fed fund futures have got a probability of like about 85% markets, or the Fed will be on hold, with only 15% now priced in for a rate hike. So look, that's the key takeaway. It's taken the heat off the Fed in the short term. But look, the numbers have got a huge problem, and that is obviously crude oil. In June last month, obviously when that data was collected for inflation, we saw crude have a huge sell-off. So that obviously down towards the low 70s and even broke below $70. And that was literally why we got this inflation number much lower. Now, obviously, the tensions in the Middle East are starting to boil again. We've got issues again. And crude oil is going back up. It's up 13% for the week. And we've last night just closed above $80. So it's hard for the market to get too excited about this miss on the downside for inflation, because certainly in coming months we can see, obviously, if crude oil continues higher, that inflation will be on the rise again. So look, the market hasn't completely ruled out rate hike bets. They think that there's no meeting in August. There is a meeting, the next meeting in September after the one at the end of this month, and for that meeting, market is still pricing in that over 50% chance that we'll see the Fed hike rates then. So anyway, how did markets react? Obviously, they liked it. Firstly, equity markets. S&P, Nasdaq, they closed up. S&P around 0.5%, Nasdaq over 1%. So yes, equity markets rejoiced. As far as the US dollar, it did follow bond yields lower. So dollar index was trading about over 101, 30, 40 area, and we went back just below 101. The key currency that benefited from the lower inflation numbers was the Aussie. So Aussie pushing back up towards 70 cents. But dollar yen, it cannot take. Even this good data has not helped. It is still above 162. So obviously the Japanese are probably not enjoying that. Precious metals, gold, yes, look, it's been struggling obviously for a while. It's been trading around 4,000, bit below, bit above, but it did have a spike back up towards 4,100 before it sold off and closed around 40.50. So again, it is hard for this market to really get some positive momentum on the back of this lower inflation print, just for the simple fact that crude oil, and it did finish up last night another 2.5%, up 13% for the week at $80, is going in the wrong direction. And so just on the geopolitical front, obviously, the US and Iran are still trading blows. Iran is bombing targets, US bases in its Gulf state neighbours, while the US has been targeting lots of targets on Iran. But Trump did come out last night and said they had talked to Iran, and he is advising them to make a deal. One of the things that Trump mentioned as well is that so far they have not targeted any of Iran's energy infrastructure. And so look, that's a big deal. And apparently he's saving that for like the end, and I guess when things really, when he no longer believes that diplomacy is going to work. But obviously, if the US starts at any stage, starts to target any of that Iran's energy infrastructure, no doubt Iran's going to do the same for its Gulf state neighbours. Crude will violently explode to the upside. And don't worry about $100, it will go well above that. We'll probably break that 120 high that we made so far this year when the war was at its peak. And potentially, who knows, the record high is at 150. So I think that's the key takeaway, is that at the moment, yes, we've got heightened tensions, but none of the real key energy, oil infrastructure has been targeted or hit yet. And obviously that has been saved. But as soon as you see any headlines that we're starting to bomb energy targets, don't even hesitate to get long crude, because it will explode. And if you think that this is the way the war's going, well, you're going to get good levels getting long here now. So yes, look, a lot going on in the markets. Good luck, and we will check back in with you shortly.